Hey, good morning. Yo, yo, yo. Hey, let me get everything set up. I got to let me get the chat going. Reload. So it's a Thursday? Is that the right time? Yeah, it's a little late. I apologize for that. Thursday the 30th, 2018. Daily Forex trading strategy session. Comment allez-vous? Now, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. By the way, my name is Wayne McDonald. It's nice to meet you, the Chief FX Market Strategist for Tradersway.com. Please visit Tradersway.Today. We want to treat you right. We want to treat you special. See, here's the thing. It's a symbiotic relationship. If you can not just survive, but thrive as a currency trader, then it's in Traders Way's best interest to make sure that happens. Because what that does is Traders Way provides you a valuable service. You pay fees or spreads, which is normal, so that they can pay their employees and live. So here's the thing. They want you to succeed. It's in their best interest. If you succeed, they succeed. So the point of these webinars, it's kind of like Traders Way investing into you up front today, now, in the future, while you're maybe don't even have an account, or maybe you have a demo account, or maybe you've opened up a small live account. But if we can sort of invest into you up front and give you the training and the support that you need every single day, then your skill levels may grow, your success rate may grow, and then over time your account will grow and you succeed, and now it comes full circle. Traders Way succeeds. So that's the beautiful plan. It's a beautiful plan. Like, think about it. It's a beautiful plan. Oops. So we're going to work together today on doing what we can to teach you technical and fundamental analysis and give you the skills and confidence that you need to thrive. So please visit Tradersway.com today and give us an opportunity to work with you, huh? We'd appreciate that. If you like these webinars that I do, please subscribe, because what that does is when I start a live event like this, or I upload a video that I do every day, you'll be notified. Okay, not spam, just notification, and it brings you to the directly to the video. So it's just, it's easier. It's very, very, very convenient. So make sure you subscribe and then click on the little bell button. And of course, likes and comments are always appreciated. It's always appreciated. Google loves them. So everybody doing all right? Guten Morgen. Oh, is that right? You guys aren't even getting, yeah, well then, I'm not in charge of YouTube, obviously. So if YouTube is screwing up, then I'm sure they'll fix it, right? Sure. So anyways, namaste. I hope everything's going well. How are the markets treating you? Yeah, oh, Mike's getting his. Okay, well, there you go. All right, so let's just go through the normal cycle, huh? We'll just go through the normal cycle, start with Aussie. And by the way, if you're kind of tired of some of these trade plans, I guess we could switch it up and do other pairs. But to me, there's so much correlation now that You know, I can look at this and I can think of about 9 other trades that are basically the same, right? Well, Hassan's waiting for peso. That's cool. Roger says it's freaking hot. Really? Curiosity JDM. I'm working with Traders Way to provide it. There's regulatory and compliance issues, and so the attorneys are looking into it. So beyond that, I don't know what that means, but they have to do things properly, right? They just have to do things properly. If they can't do it, then I will find a way for me to do it, maybe through like FX Bootcamp or something like that, okay? But it has to be done right. So I apologize for the delay. All right. So let's take a look at all of this. Okay, we got to remind ourselves where we are. Remember this area here used to be support, now is resistance. We had this marked up a long time ago. Well, we're stuck here now. You see how there's a big green candle and then a pause, and then sort of a hanging man and a pause, and then a doji and a pause, and then another hanging man and a pause, and now looks like a bearish engulfing candle. Less and less bullish every day, huh? Roger, we'll take a look at oil. We'll do it soon. Okay, so we talked about this yesterday, that this was very bearish for a bear, right? Bears would want to sell up here. Look at this crazy drop, huh? Isn't that just amazing? This gray area is where bulls would want to buy. This gray area up here is resistance. It's not necessarily where bears want to sell, but it's definitely resistance. But pretty amazing. So if you're a bull, you can still be a bull here. Remember, the trade plan was bulls could buy here, or they can buy here. This part, right? Let's revisit this. You see this part? We drew this, I think, when we're up here, and I said, look, bears want to sell this, bulls want to take profit, so it should fall. Where should it fall? It should fall in this old roll reversal, and this is the first level for buying for bulls, so a bull would buy this. Okay? And now bears really got themselves in a situation where they can still take over if they want to. That's kind of what it looks like. Okay? And then the other part of this is still probably a good area to buy for next month. Okay? So I think the other thing I said here is don't be shocked, don't be surprised, all that kind of stuff, if it works its way around. Okay? And bulls could still buy that. It's very less ideal. It's not what a bull would really want. Like, a bull doesn't mind this drop here, but a drop down here would be very bad. So really, if you're a bull, what you're hoping is that this earlier level, so let me drop into a 15, you want to see this turn north, like soon, like now. You know, not sure if you're going to get that, but that's what you would want. A dip below this area is basically says not up for now or today or whatever, right? It really delays what you might think is the inevitable. Okay. Do you have to watch or monitor gold? No, not really. Okay. But like, I mean, as a currency trader, no. I mean, should you know it? Yes. But like the last time I was in Dubai to do a presentation, now I've been to Dubai 2 or 3 times and not done presentations. It's been a long time since I've been to a conference. I guess the one in China was the last one. But anyways, the last presentation I gave in Dubai was how to trade gold, oil, and the US dollar. That was popular. I did one a couple of years earlier than that, so maybe 2010, I did one on hedge fund trading strategies, and that was also very popular. So I don't know. So, but no, you don't need to. No, you don't need to. So the way you wrote that, it's like, you know, do currencies move because of gold? No. No, they do not. Okay. But if you know someone's sitting on a ton of gold, they will probably try to convince you otherwise. All right. Well, let's not do this one yet. Let's do kitty cat. La, 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 la. So we've hit our weekly target. You should kind of be done. And bulls, long-term bulls, have permission to start tiptoeing into the water. But remember, this water is still cold. Don't get too excited. Okay. Does anyone feel brave enough to start tiptoeing into a buy? So the most aggressive traders could be long now, but you got this in the way, but you're looking beyond that. So what a longer term trader would like to do is sort of an up, maybe even a down like this. Yeah. It doesn't have to double bottom. It could just come down here, but I'm going to do the most conservative, point of view type stuff. You know what, I'm going to adjust this way. Okay. So if you're a bull, you'd have to look at things like, all right, that's your short-term plan. It's risky because clearly this is still down. Okay. So a bull would have to say, well, it would make a high and then a dip and then a high and then a dip. In which case, you'd have to pick your buy zones. Well, you'd want to be long now. You'd want to be long maybe here. Okay. And another one here. Okay. And if this one doesn't work, you do this. It ends up being about the same anyways. Okay. So you would start to put this together, like maybe take a shot here, jam your stop because it's very risky. And then there's this area, and then there's this area. Okay. Now bears, what do bears do? Sell off the 21. Okay. So a bear should be thinking, it's kind of the same, but I'll put it here. Little more aggressive for bears because the trend is down. Okay. Sell high. So you know the drill. So I'll do it just one more time, or probably a million more times, but one more time to kind of just point it out. New lower low, look left, drag it across. That's your new sell zone, right? Okay. Whoa. So we talked about this euro dollar hanging up here around 1750. It's been 2 or 3 days now, huh? Jean-Guy, right, says, can it go to MM1? Terrible question. Of course it could. It could do anything. It could go to MM0, right? So you should redefine your question. You should always be careful what you ask. So I think you were talking about this thing. Okay. Okay. I had the analysis heading down to M1. Okay. Right? And that plan has been in rolling for about 3 weeks now. What I'm suggesting is, if there's a bull, what would their plan be? And they're going to want to reverse this. Okay, great. Next thing, if they reverse it, what would it look like? How would the price action behave? What pivot points would be in play? What moving averages would cross? Okay. Okay. So yeah, well, all I'm suggesting, Jean-Guy, is that the question, can it go up or down, is a terrible question. And I'm not pointing it out to make you look bad. I'm pointing it out so that you don't ask those questions again, because what you need to say is, because it can do anything. So the answer is yes. But then you could say, well, can it go to M4, not M1? Yes, it could do that too. It could do anything. So a better question would be, with oil going up, what areas or what technique or tactics would you use to sell this so that we can get to M1? Now, I'm being nitpicky, but I'm trying to get you to be, the best. And it's a mental thing. Well, you wrote it, and I know you might say, "Oh, I just wrote it quickly." Okay, sure. I demand perfection. So, anyways, it's important to get the mind to think this way. So, if you asked it, you're probably thinking it. Okay. So, therefore, we need to just polish those rough edges a little bit, right? Because there's doubt in the language, okay? But maybe that's how they say it in Montreal. I don't know. The point is, with oil going up, if that makes you a bull on CAD, then you want to sell the 21 or this roll reversal with a target of MM1. Way different language, right? Hassan, you're supposed to buy the peso. Is today officially the last day of the month? July 31st, so August. No, tomorrow. Okay. Maybe you meant you shorted the dollar peso, which means you longed the peso, but anyways. So anyways, I don't mean to beat you up too much, Jean-Guy, but in the long run, I think that kind of stuff's important. That's all. Okay. So, yeah. See again, Hassan? It means, right? So in that case, there's no doubt you're like, oh, with oil going up, I want to buy CAD. So what, how should I short this, Wayne? I'd say, well, off the 21 or off this roll reversal with a target of MM1, it's pretty good. You definitely want to get down there in the next 48 hours. Okay. The thing to be cautious about is this is a bullish swing zone. So bulls would like to reverse it here. They would love it. This would be a fantastic place for it to start heading up. But with oil moving, if you're a bull on a CAD, you're actually the more conservative of the two. August 31st, that is my date of birth. I got to the party and I did the smurf. I get it. I go it. I know it's good. My rhymes are tight. You wish you could. All right. Pig dog. Up, 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 up. Down, down. Bye-bye. Nice. Now what? You say, Wayne, now what? Well, we've hit the target quite accurately, I think, right? Right? Doesn't that deserve a high five? Knuckles or something? That ain't bad. Look at all this gray hair that trading's giving me. Sorry, very unprofessional of me. Not bad. Not bad. Hit our target, stopped. Great. Now what? Well, if you're a bull, it's standard operating procedure now to mark the old high, which is here, and it's a current pivot point. That's great. So there are two places to buy. You could buy it off the 21, preferably the 4. So where's the 4 now? 4 hour 21 is the roll reversal. Yeah, so going back to here, this tells you if you're a bull, you need to be a little more cautious. Another way of saying that is if you're ultra conservative, you would have taken your profit and you're done for the week. You're already setting up, you know what I mean? You're already setting up next week, next month. That's what the ultra conservative is doing. Bears are actually in permission to sell here. Multiple reasons. One of them is we hit our target that I created on Friday, by the way. We hit the Grand Poobah on Wednesday, which gives you permission to consider a counter trend trade. Not because there's bears here, because every bull that bought down here is supposed to take profit. So if you knew you're supposed to buy it here, then you know you should take profit here. So that makes this heavy. And even a conservative bull now, like an aggressive bull is going to want to buy it off that 21. Especially if they're looking at just the hourly chart and the 15-minute chart, right? Those are like your day traders. If that's all they're looking at, then they want to give it one more shot, which still might only get you up to here and then have it collapse. A conservative bull now will take their money, probably take today off. They're probably not even trading Thursday. They're at the museum, right? And really what they're looking at is Friday or Monday. They want to buy it at this 129.30 area, 129.25. Okay? And that's really what's going on here. Okay? Now, a true bear, okay, might throw a little trade into there, but what they really want to do is have this fall all next month. So which one? Okay. Well, it just comes down to your bias. If you're a bull or bear, it's pretty easy, right? If you're a bull, you buy it here. If you're a bear, you sell it here and here. It's fairly easy if you've made your decision. And what do you need to make your decision? You could just say, well, Brexit, so I sell pound. Oh, good. I mean, I can't argue that, right? What am I going to say? No, Brexit's good for business? So just pick one. If your argument is Brexit's overblown, Or maybe that you expect US dollar to weaken. Yeah, okay, great. Yeah, great. What am I going to do? Argue that? I can't argue that. It's your opinion. Okay. Stuck in the fib wars. Remember this one? Okay. Bears are going to, let me repeat this just because it's clear to me, but I need to make sure we're all on the same page. If you're a bear, there's the role reversal, there's the sweet spot. If you're a bear, you were supposed to sell in this area yesterday. Okay. John says that he thinks that this, I don't know if you're talking about pound anymore. I think you are talking about pound. But so anyways, I'll ignore that. So anyways, that's where bears are going to want to sell. And this was yesterday's trade plan, by the way. So whether you did this or not, I don't know. The next part, bulls are going to, if you're going to use a trend measuring tool, you're going to look at it this way. And in very similar fashion, I'm going to look left, grab the old top, but I've already done this, but I want to put that there. So that's a buy zone. And the rest of the buy zone using Fibonacci is this whole area, right? So if you're a bull, yesterday's trade plan was for you to buy it here at just above 1200 or at 1200, okay? So it's one of these things, like if you trade gold and you listen to what we do and you follow the trade plans and stuff, then this is pretty simple. If you're a bear, you should have shorted here. That's what we talked about. And if you're a bull, you should have bought it here. So yeah, there's two trade plans. Which one's right? I don't know. I don't know. How would I possibly know? I just know where you should buy or where you should sell. And imagine you have a client that has a ton of gold. And your client doesn't want to buy more gold. They want to hedge gold. So they're like, Wayne, you should hedge my gold for me. I'm like, great. That's really good. I have some ideas whether gold prices are going to go up or down over the next year, but I certainly couldn't predict that day by 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 day in a speculative manner. But since you have a warehouse full of gold, I can help you lock in prices. I can hedge that for you because I can figure out where to sell. And I can figure out every single day where to sell. Yeah, I thought so, John. Right? So today I'd say, well, there's the sell zone. And if it falls, I can figure out the next sell zone after that. Or if it rises, I can figure out the next sell zone about that. And I can do that all day long. That's what a hedge fund, a traditional hedge fund is. They're not speculative per se. Okay? Now, the idiot funds, they just sell. They get a phone call and their client says, yeah, I got some more gold. All right, we'll hedge that. And they go, sell. And that's that. Was that a good price? Nobody cares. A friend of mine, he has 25 employees in Switzerland. Enough employees and enough money spent in Switzerland that Switzerland gave him a driver's license and like a permanent resident. A permanent residency. Anyways, he's got 25 full-time hedgers because he does business in 20 or 30 countries, or currencies, I should say. So his office will give him a call and say, yeah, we're exposed to whatever currency. They're like, okay, sell. And they pay these guys to do that. I'm like, well, why don't you just sell when at the right time? Have dynamic hedging. So if prices of gold are going up and are benefiting you because you have physical gold, don't sell it. But as soon as it shows signs of weakness, then you sell it. But anyways. So anyways, if you got $1 billion worth of gold and you want me to hedge it for you, give Uncle Wayne a call. Neato. So I was at the school board yesterday, or a couple of days ago. My kids won state championships and were recognized and given awards by the school board for the best in their county. Again. Like, these guys are privileged, man. Holy smokes. They're like, oh, Dad, do we have to go to the stupid school board thing and get another award? I'm like, yeah, you do. Thank you, Roger. All right, so here's oil. It's amazing. Who would have thought oil was going up? It's just crazy, right? I hope you guys are starting to truly feel like you can do this on a regular basis. Like, this could be your gig. This could be your job. I mean, all of this we lined up for so long and so far in advance. All of this up move we were on. The target was 72. We get to 72 and it collapses. And then we're going back to 72. And then, so the most recent part of this multi-year trade was it was going to go up here or here. Well, the second one worked. How'd you know it was going to go up, Wayne? Oh, I track macroeconomic data. I mean, it could have fallen. But my analysis of the supply side and demand side of the WTI equation of the entire energy complex, I thought it would go up. Now we have to be very, 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 very careful. What's important about the price we're at right now? 69.83. Anyone gonna try to guess? Answer? By the way, can you throw in a like if I'm covering the right stuff? Let me know that you appreciate the topics we're covering today and that I'm on track. It's where oil turned down before. Modestly interested in that. Not really. Mostly because we've blown through this, so this, I don't know. Yeah, I mean, okay. Psych level, you mean 70? Well, we're ain't at 70. I mean this exact price, 69.83. Next month's M3, Jacques. Okay. Jacques. These watches are too big. I need to get a small watch. This is smaller than a Panerai, but still heavy. 70 round number. No, I don't really care about that stuff. So it's the biggest thing is it's next month's sell zone. Okay. If I was a bear, I would love to sell that. Oh my gourd. Okay. If I was a bear, I would be dying, chomping at the bit to do that. That's what I would want to do if I was a bear. And then I'd look left and right and completely convince myself I'm right. But of course, most of that's nonsense, right? Makes me think about how I believe people make decisions. They make decisions emotionally first, and then they try to justify that decision intellectually. And people will just get so caught up in their intellectual reasons for this, that, and the other thing. And I'm looking at them like, did your stepfather beat you? Is this why you're going ape crazy on me? Yeah, the Turkish Rolex. Yeah. This is a new one. But it's I don't know if you can see that. I was trying to show it. I don't think you can see it though. It's the Picard version. There's too much of a delay, so I can't see what you can see. So anyways, but it's heavier. It's heavier than the Panerai, like this one. So the Panerai is bigger, right? But this is ceramic. That's why I like the Panerai, but then it's like this. But then I need big watches because I can't see without my glasses. So anyways. Yeah, I don't even use watch. Well, but I get caught, often like I don't have a watch and I don't have my phone and I can't see anything. And so so then I went back to the watches, but they're so big. And I lost my Patek. I lost it. I don't know where it is. I looked all over for it. It's gone, man. But I don't know. But I don't drive a car, guys. I don't have a car, so I'm not a pig dog. I don't have a yellow Lambo. I drive a golf cart, so don't worry about me. This is my phone. Yeah, but I don't always have my phone. I mostly, but sometimes I don't. Yeah, there's just certain situations. But so, anyways. Yeah. Yeah, but it's man jewelry, right? But I was at a party last summer, and a guy comes up to me and he's like, "Is that a Panerai?" I'm like, "Yeah." He's like, "Oh, well, and I swear to God, he went on to a 45-minute story about his Rolex, and it's a special kind of Rolex, and he went to a whole bunch of different stores looking at Rolexes, and he couldn't find the Rolex that he wanted, and then he was on vacation with his wife, and then they're in some place, and he went to all the Rolex stores, and then finally they had the one Rolex that he wanted, and he's just going on and on and on. So this year, I went to the same party just a few days ago, and I knew this dude would be there, so I didn't wear any watch. Because I don't care. Who cares, dude? The only thing worse would be a yellow Lamborghini. I had another guy, he's so I was building my movie theater this year, so last year he has his own. I'm like, yeah. And he's like, I have 12 subwoofers. This is what he told me. And I said, are you an idiot? He's like, what do you mean? I'm like, what kind of idiot builds 12, subwoofers? So, idiot. All right, so we're stuck in here, WTI, but what does it mean if we blow through this? Okay, it could be very good for global macro. So there's quite a few people said you're worried about 70. I don't really care about 70. I care about 72. Okay, so 69.83 is technically important. Okay. The next one is going to be right shoulder. Now, how long ago did I set up the head and shoulders type thing? We talked about it in, I think, March or April. Yeah, John. Yeah, John. I only have one subwoofer, and that's enough. Yeah, that makes sense, John, too. That's how I am. Okay, so the inverse head, or not the inverse, sorry, the head and shoulders has to be worried about because it's a technical pattern. And it's a technical reversal pattern at the end of a trend. And I would argue we've been in a trend since this bottom. Okay. So it could occur. Oh, it could occur. I'm not saying it will, but it could. And you would have to recognize that that is potential. And by the way, that's an R1. And I'm still a bull, so I would still even venture to say, if a bear dumps it on an R1, we can still buy it back on an S1 and then do the breakout later. But where is the risk in the market, even if you're a bull, right? My neighbor's saying, well, my theater is soundproof. I had the whole thing, put 2 different layers of open cell and closed cell foam through all the walls and ceilings. So it's all good. But the house vibrates, there's no doubt. So that is that. Charles says we could be in consolidation for quite some time. Yeah, because it makes me think, like, let's say we make a higher high later this year, like we get to 80. I don't care about 70, but let's say we do whatever needs to get done to break through the consolidation. We get to 80, but it's December or something. And then I think what could happen is then we have a pullback from January to June. Is yen getting stronger? Well, are you watching JGB yields? Nikosi? Because they're elevating. And if you're reading reports off the Bank of Japan website and their media minutes and their recent speeches and stuff, there's a concern there. But the finance minister, who is it, also, has said that they're aware of it, they're not concerned about it, and then the Bank of Japan also says they're aware of it, and they're not concerned with it, but they can step in at any time and beat that yield down. So all of this is known information over the last 48 hours, and I'm assuming you're cruising through the Bank of Japan's website on a regular basis. So yesterday, guys, I showed you the, was it the commerce? Japanese commerce site? Anyways, watch yesterday's video, and I'll show you, like, this, the information out there is incredible. and how I went to a Japanese financial website related to the government. I think it was the Department of Commerce website in Japanese. Clicked on the English link, went down to the report, went to the statistics part of that site, went down to the reports, and there was one released just 2 days ago on the economic situation of Japan, and reviewed it. Yeah, the Cabinet Office, thank you. Okay, now the thing is there's multiple ones, right? And you're like, well, how do I get to know all these? You do research, spend 100 hours going through all the different websites. You're like, Wayne, you're asking me to spend 100 hours on Japanese government websites looking for downloadable information? Well, I'm in grad school taking 2 classes at Harvard, one on commercial real estate development, and the other one on financial accounting. Then I'm stepping up further to take 2 other classes, one on managing boards and financial endowments for things like for artistic institutions like museums or the symphony or something. So, right, I'm doing another one on an economics thing with someone from the New York Fed. And on top of that, I'm teaching myself thermodynamics to help to become a coach for the new Science Olympiad team. And it's serious stuff, like serious thermodynamics. Yeah, all of that, I bet you it's more like 1,000 hours. So yeah, when I'm like, yeah, you should spend 100 hours just surfing the Bank of Japan's website and various other government institutions that have to do with trade and economics, like inflation and all that kind of stuff, and organizing them and taking notes, doing flow charts, and finding the ones that you like and finding out the ones that are critical to things, and right, and just, yeah, 100 hours would be like nothing. It'd be a pittance. Only 100 hours. It's laughable. Only 100 hours. You know what I mean? Certainly something that you're capable of, right? Your nonprofit music production company and board and currently underdeveloped. Well, okay. Yeah, so this would be like, again, working. This class is specifically on museums, because Harvard has one or the best museum program in the world. Shocking, right? And so this is a particular class on managing the endowments for these universities, and either a financial manager, making investment decisions on behalf of the board, or as a board member overseeing, like, let's say, the finance subcommittee in charge of the endowment itself, right? So anyway, when I throw out something like, yeah, you should spend 100 hours doing research just on the information available by various Japanese government websites, including the Bank of Japan and others, and download it, organize it, study it, master it, all this kind of stuff, you should be able to teach somebody after 100 hours, right? You should be able to go through the top 5 different websites and economic indicators or whatever to understand the Japanese yen, whatever. You should be able to go out, devour the information, right? Put it all together so that it's useful knowledge with actionable items for you. And it should only take you 100 hours. And that should be nothing. That should be absolutely nothing. Okay? And it probably would make you and a fantastic trader, right? If you invested that, only 100 hours, right? Think of that. It's 2 hours a day for 10 weeks. That's like until I get to midterms. Like, it's nothing. Oh my gosh. It's nothing to invest that time, that especially into your own career. Oh my gosh. Right? Like when I was in summer school, I was thinking about it. In the 3 weeks I was there, I went to classes 6 hours a day, but I think I calculated I spent more than 100 hours in the library. But anyways. All right. Peso. We want to sell this between now and Friday. Sure, John. But, think of like most museums and symphonies and, orchestras and all that kind of stuff. So if you're the Met and you had, a $70 million, or that's not even enough, a $7 billion endowment of, rich people leaving you tons of money, and that you need to manage your staff and your insurance and all that kind of stuff, have a disaster recovery plan and ability to finance, and then, how much do you buy in art, how much do you rent in art, and then, all these different things have to go into, the financial plan and long-term financial management of the $7 billion to ensure that the institution will be around forever. And so he was in the syllabus. There's interesting conversations where about museums losing money versus museums making money, and all this kind of stuff, and how do you handle this and that, and short term versus long term. So I haven't taken the class yet. That one's in November, but think of it like, so I'll fly there and invest almost 100 hours over the course of a weekend, right? So all day Friday, all day Saturday, all day Sunday. All right, it's not quite 100 hours, but you get the point. Like, you could do 100 hours in a week if you wanted to, but that'd be a bit much. All right. All right, so we want these suckers to go up. Oh, they're going up. Oh my gosh. Yeah, very nice. Okay. Okay. Beautiful. Look at all these things, guys. If it opens out of position, you buy at the 4 hour 21. Boom, 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 boom. Very nice. Kiwi's getting crushed a little bit. Okay. This one would have knocked you out by now. Okay. Once again, notice how, like, on Friday, we're in the middle of this week's buy zone. That's why I like to front run. Here's the retracement, second chance buy on Monday. And now it's collapsed and it's dead, right? Maybe you broke even. But do you notice how this is the worst of the swing trades so far? And it only went up 90 pips. Okay. Look at this one here, USD yen. This isn't one I like to trade, but it went up, hit the monthly, and started screaming, huh? So how do you want to trade this? This one's a trickier setup. Are you going to trade it with price action like a breakout? Okay. Because I think somebody sold this like, so look, yeah, okay, it's this month's central, but it's next month's sell zone, this 111.80. For a bear is supposed to be the high of September. Isn't that crazy? Yeah, well, there you go, John. That's why I teach front running with the swing trading group. Obviously, you do face, gap risk. But it does help you sleep when your stop's already at break even. So anyways, guys, if you are a bear, that's where you want to sell. You think as a bear that should be the top for September, and it's down to 109 here. That is possible. I would not like to see that per se. I'd like to see sideways because I'd like the dollar and the Japanese yen to weaken in September. Okay. Aussie, sideways, 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 sideways. Okay. So it's one of these things like, well, figure out the top and bottom and trade it like a range, or stay away. Oh la la! Yeah. So this one I look at, it's neither here nor there. On the shorter run, it's consolidation up, consolidation up, consolidation up, consolidation up, but the difference is this. Okay? So I don't know if this is where bears want to start selling it. It's not the greatest. It should go a little higher, right? There should be one more move up before it moves down. So, I'd like to see this, then some consolidation again, and then if it's going to collapse. Oops. I'll get rid of that. Okay. If it's going to collapse. Now, I don't want it to collapse. I actually want it to make a higher high. I don't want it to come all the way back down and then go back up. So I look at it as sideways, up, right? So sideways and then up, and continue that theme, and that this is basically the low right now. That in the next between now and Friday, we find an opportunity to buy. And not expecting a ginormous rally or anything. In fact, probably a drop and then back up. But nonetheless, tiptoe into the cold waters, right? Okay. Swissy scan? Sure. Would I like to love you? And I was just a kid. So it didn't fall as far down as I wanted it to, but it did fall. And then I said once it fell, it would retrace and then drop. Okay, cool. That's interesting. Wonder how I came up with this. Would I like to love you? Don't really recall. Okay, what do you want to do with this? Are you a buyer or a seller? Look at the beautiful price action. Just ridiculous. Right? I've taught you guys so many times. Lower low, look left, drag it across, new sell zone. Great. So there's definitely bears on this. Okay. Alan, are you a bull or a bear on Swissy? Hmm? There's a bit of a delay. I changed the setting in YouTube to give you better resolution or more stable resolution, but I think what it did is put a 10-second delay or something. Maybe even 20-second delay. So, yeah. Yeah, I can see now there's at least a 20-second delay. All right. Well, so I'll just go with it. There's definitely bears here. Notice they sold at the roll reversal. They also sold at September's sell zone. So there's some serious risk if you want Euro Swissy to go up. There's some serious risk that this is coming down, like significantly. Okay, to 109. I guess we'll call it 110. We'll call it 110. Actually, it's 111, isn't it? 111. So this should drop another 200 pips. Okay. Well, Kevin says, how do you join the swing trading group? You have to complete the swing trading course at FX Bootcamp, which costs money. And then once you've completed it, then you have to join the group at FX Bootcamp, which also costs money. But we just started the group. There's only been 1 week. So anyways, if you're going to do it, you better get on doing it. All right, cool, Roger. All right, cool. And oh, yes, and now you can rewind while live. Yes, so I added that too, Brooke. Okay. Would I like to love you? That I was just a kid. All right, Aussie Swissy. Okay. What's the trade plan for last week? Sell at M3, target green zone. Right? What's the plan for this week? The swing trade plan for this week? Roll reversal, central pivot, target green zone. So what you need to do now, similar to this and this, expect some sort of pullback into this area, which I'll mark here. And I would anticipate bears selling in this gray zone. So I'd be taking profit now if I were me. I'd get out of the market if I were me. And I'd be setting up this trade Friday or Monday. See? Monday, sell. Fade. Monday, sell. Fade. Monday, sell. Okay. Roger, there is no scalping group. Okay. This looks like pretty easy trading there. Kiwi Swissy. Let's move this because this is going to be very, 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 very similar, right? Oh, look, sell zone. Look, hit the target. Boring. So that's going to be the same, but let's do something like I definitely never look at. Or actually, you know what? No. Well, Pound Swissy is a great currency pair. I don't know if you guys traded or not. I actually like Pound Swissy. It's not what I intended to do when I opened this up, but now that I see it, I'm like, that. If you like Swissy, you should really be on the Pound Swissy. Then I also realized we had that big pound move, and that'll probably mess up the Pound Swissy trend. So I'm going to go back to original. I was thinking like something like CAD Swissy or something, right? Take a look at that. Okay. If R1 is the top, what's the projected bottom? S1. And that is here. Thank you very much. Okay, cool. If M3 is your top, which is here, what is the target? Here. Cool. If the central is your top, which is here, what is your target? Here. Lovely. Nice top, perfect bottom, perfect top, perfect bottom, perfect top, perfect bottom. Cool. What's the next trade, you say? Well, if you're still a bear, right, you look left. How boring this must get. You look left, you drag it to the right. There's your new sell zone. It retraces back, and somewhere around there, you're going to get yourself short because you're a bear. And you'll try one more time. Okay? Isn't that nice? Yeah, Roger wants to know this. You know, the one thing I'm going to change, I'm 90%, probably even more than 90% confirmed in my mind, and it's something I'll probably try to ponder again today, but the MetaTraders group, I'm going to make changes so that we'll have some people on demo accounts, some people on live accounts, and I'll create it so it's an easier program. Demo accounts will be a little cheaper. Live accounts will be a little more expensive, but you know, basically what it is now. And we'll have it'll be a group of people coming together that are as serious as a heart attack, willing to make a 3-year commitment to creating a marketable track record of success as a professional currency trader so that you can go to a bank and get a job, or go to a hedge fund and get a job, or start your own fund and get investors because of your 3 years of experience as a professional portfolio manager. Right? And so what happens now is when you're trading a live account, you open a $5,000 account and we bump that up to $25,000 and you're golden. But if you didn't have the confidence or skills yet, or you didn't even have the money, but you want the experience, I can provide that as well, right? You just wouldn't be trading real money. But that would be up to you and your situation. But you should still be able to benefit from the process. And we could build a nice community of people that are not just there to, I mean, it's not like a learning type environment. It's more of like an actively work. It's like a work environment. You're a portfolio manager. and you're making all the trading decisions. So I need to sort of adjust a few things and add a different level and make it easy for those that, make it sort of more official, and maybe we'll get 25 people working together on that. Oh, and the other thing on that, go to having a London session and a New York session. So it would be sort of like a little bit of the, live trading room group kind of stuff, but much more focused on professional than just some expert looking for trades. Well, you already know you're the portfolio manager, so it's more like just working together, watching the markets together, but doing that during the London session as well as the New York session. Okay, cool. So Brent is also at resistance. You see that? How funny, huh? Cold shower. There's a problem with that, right? There's a problem with that, and I see it like I talked about it yesterday with my own children. It's a very interesting thing how the human brain works. The cold shower and all that kind of stuff. It's not bad advice, except it doesn't work. You're punishing yourself. And inevitably what 99% of people on the planet do is they just quit because they're too lazy to even give themselves a cold shower, right? So they just fail. It's whatever. But I was watching a video with the kids, and a little child of maybe 3 years old, like a toddler, walked up the little plastic slide and had this plan where she was going to slide down the slide. And she's like, look at me, right? And the slide's only like 2 feet high off the ground, the little plastic ones, right? And then instead of sliding, she just fell down face first onto the slide, rolled over head over heels, and splat on the grass. And she popped up immediately and said, yay, I did it, like nothing happened. Even at the age of like 2.5 or 3 years old, we are much more affected by embarrassment than we are by pain. It's amazing. Watch anyone do something, wipe out and do something incredibly painful, and they'll react more to the embarrassment than their pain. Now, the pain will kick in later, right? But we're much, because we're so social. And especially, I don't know if I can say more for men, but there's this culture with men that maybe is more prevalent with women. I don't know. I might be stretching a little too far on that one. But that even if you are hurt, at least Canadian men, even if you are hurt, you'd be damned if you admitted it. You're like, oh, this finger, and the finger's all the way back. You're like, no, that's cool. No, that's cool. I'll just duct tape it, right? But right, you just spray some Windex on it and you'll be fine. So what I've always advocated is there's 2 things. One, if you're on your own, if you do a stupid mistake, you tell your wife, you tell your husband, you tell your spouse, whoever, that you're going to sleep in the bathtub. the next time you do stupid trading, okay? It's not the fact that you're in the bathtub sleeping uncomfortably. It can be a little bit, but most people would just stop doing it rather than stop trading like an idiot. They just say, I don't want to sleep in the bathtub, and they just don't do it. And that maybe that character flaw is what leads them to maybe not being a success as a currency trader. You have to be disciplined. So just wimping out is maybe one problem. But the more effective part of it is telling your spouse or loved one, hey, when I screw up as a trader, I am going to sleep in the bathtub and I need you to support me, right? And it's that part that you're going to be more affected by the embarrassment in front of your spouse than your uncomfortability, your uncomfortableness of the bathtub. So when your wife, for example, is like grabbing the pillows and the blankets and heading off to the hot tub and setting up your little nest for you, it's horribly shameful, especially if it's for the fourth or fifth time. She's like, I can't believe it. You did what? And now she's like, blankets, pillows, like now, right? To take it another step further, if you were working for me in a hedge fund and you went through a period of dumb trading, I would make you wear the suit of shame. And most people have heard this story, so I won't go in the full story, but just imagine overalls, right, where you step into them and then you zip it all up and, sort of like a flight suit or something your mechanic would wear or something a painter would wear, a one-piece thing that goes over your clothes. Well, this one would be bright orange, like you just escaped from prison. And we'd probably have stuff written all over it. But that suit of shame would be in the office. And if you went through a bad period of trading, like, not that you didn't, like, if the market didn't do anything, that's not your fault. But let's say you lost a bit of money because you chased some price, or you threw down trades without a plan, or whatever, right? We would identify that. Your manager would identify that. So if you went through just piss poor trading, you would be required to wear the suit of shame for at least a week. So you're standing in the coffee room with all the other traders having coffee in the morning, and you're the one wearing the suit of shame, and everybody knows that you effed up. And it's more important to you to stay out of the suit of shame than lose money. So a degenerate gambler is going to take my client's money, make a bunch of piss poor trades, and then make up for it by making a whole bunch of more piss poor trades, but at triple the leverage. They're not ashamed of losing the money because they could always justify it. Well, everyone loses money. Whatever. But talk to my client. He doesn't understand why this rogue trader went crazy. So it's more important to avoid the shame than losing the money. Most people, when they start currency trading, and this is probably you start with whatever amount of money, $1,000, and you say to yourself, I'm going to pop $1,000 into a Trader's Way account, and if I blow that account up, then I'll go do that options course, and I'll learn how to trade straddles. And if you lose $1,000 doing that, then you'll go take a real estate flipping course or something, right? But with that attitude, you've already lost the $1,000. Because you're like, yeah, I'll pop $1,000 in the account, and if I lose it, I'll go try something else. You just made the decision it's okay to lose it. What if you said if you lost $1,000, you will cut your thumb off? You're like, what? Right? What if you made a deal with the mafia? Right? Like, oh my God. How about this? Go to your father-in-law and borrow $1,000 and then make those trading decisions. It elevates it to a much higher level. You don't want to lose your thumb, but even worse than losing your thumb is losing your father-in-law's money. Can you imagine what like the holidays are going to be like the rest of your life? You're going to get that you're going to have to face your father-in-law every year for the rest of your life and try to avoid talking about the time you lost his money. That'd be way worse, right? You'd probably rob a liquor store to get his $1,000 back, and you're like, yeah, I decided to stop trading, right? Here's your money back. You'd rather do 6 years in prison than face your father-in-law for losing his money, right? Yeah, but Ross, I don't think you're actually training yourself to the right thing. So just imagine the little 3-year-old that, fell off of a slide and went face first in the ground, and then her feet went flying over her head. Boom, just this crash and burn. And I swear this kid was 3 or less. I don't know the age of kids, but, pint size, like the size of my boot, right? And the kid just jumps up. I did it. Not even like I'm okay. Not like, oh my God, I just hurt myself. I'm okay, mommy. Or many kids like fall down. They're like, mommy, should I cry? Am I supposed to cry in this situation, mommy? If I cry, will you give me your, a hug? Right? Because we teach our kids to wimp out. Right? Oh, my baby, are you okay? Come to mommy, right? No, the kid just stands up and like, I did it. I was successful. I didn't screw up. What do you mean hurt? I meant to do that. The embarrassment was significantly worse. Right? So this is why, and I haven't gone through this period in a while, but there was a time a few years ago, several years ago, where and this was when I was running FX Bootcamp full time and all that kind of stuff. And I can't remember when it was, when I came back from India or something, but something happened. And I went through about a week of really, really bad trading. Right? Like bad. Losing a reasonable amount of money. And then on the 5th day, I compounded the loss. And then in the last 20 minutes of this horrible week, I compounded it again in 20 minutes, just bang, 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 just snowballed. And then all of a sudden I'm like, right? I step back and I'm like, what am I doing? And in that period of time, and even in that small period of time of just a half an hour, I had made every single mistake I thought I had washed away from my trading soul. And it scared the bejesus out of me. And I was down a lot of money. And I told everybody, the coach people were paying money for, I think $300 a month, right? And I came to the community, I'm like, I just royally screwed up. I made every mistake I know, and then I think I made a few others. I was sloppy, I was lazy, I traded, I chased, I revenged, and I've lost a crap load of money, and I've really shaken my confidence. I didn't think I was capable of trading that poor again. That's how it was in the beginning, but in that period. And I admitted it to everyone, I was in tears practically. The coach, the expert. But I didn't have shame. I had honesty. And I shared with everyone all the mistakes I made, or the ones I could recognize, right? And then I told people that I'm going to work not on making my money back, because that's how things get worse when you're trying to make your money back. So I worked for probably a month in front of my community of rebuilding my confidence. Oh, Peter was there? That's when you started. Oh, no kidding. That's a while ago. Yeah. And so I worked on it, and I think all I did was, I think I started with 10-10 OCOs, then 15-15 OCOs, and then I think I just moved to 25-25 OCOs. And my goal was simply to do hardcore, solid analysis, real trade plans, and then winners. Just winners. And they were easy. Like I said, like 20 pips. You can look at it as a scalp, but I looked at it as something different. Like, it wasn't a scalp because I had solid trade plans, a solid everything behind it. So I don't care if it was a 100 pip move. I wasn't trying to make 100 pips. I was just get a winner and another winner and another winner. 3 in a row, 4 in a row, 5 in a row, 6 in a row, 10 in a row. Just, but not even in a row. Just, I can do this. I can do this. I can do this. I can do this. I have patience. I have discipline. I can predict these moves. I can set up these moves. I can take the shot when I'm supposed to. I can do this. And I did it over and 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 over until I could rebuild my confidence. And again, the confidence had nothing to do with pips. The confidence had nothing to do with money or making back my money. My confidence was 100% to do with discipline and discipline only. I can set up the trade and I can take the down trade. And that's all that matters. Because after I take the trade, I'm not in control anymore, right? But I had done all this other crap because I slowly was losing my discipline. I was getting a little sloppier on my entries. And, just a little looser, right? And then a little looser, a little less analysis, a little more trading. A little less analysis, a little iffy on the entries. And a little wider of a stop will fix that. And so it slowly crept in, probably over months, until I had like a bad week. But then that, because I had lost the confidence, then I'm like, I'll try this and I'll try that. Oh, I'll take this, and really started throwing trades down. And then I guess it ain't falling, so it's rising. And all of a sudden, it just pure amateur hour. And then that last day, in the last half of the day or whatever it was, that just horrific trading because I had no discipline left. And by that point in time, no confidence. Completely destroyed as a trader, but confident enough to admit it. Because you have to be able to do that, right? You have to have that. And then I worked on that to get it back. And I'm glad Peter was there. Oh, man, I'm still sick. It's all right. Now I'm crying. Anyways, those are hard periods. So now that community can work for you. You see what I mean? Where you need to have that. Imagine now also that you don't have to make your decision. What should you trade today? And should you be a bull or a bear? What if you don't even need to make that decision anymore? What if I hired you to work at my hedge fund? And I said, you're going to sell Brent crude oil. I already have someone buying it. I already have someone doing WTI. I already have someone doing nat gas. I already have someone doing CAD. This is where you're going to start. You are the Brent crude ultra short manager. Your responsibility to the firm is to look for the right price and the right opportunity in which you can short Brent crude. You will do that today and tomorrow, next week, next month, next quarter, for the rest of the year and all of next year, and then all the year after that. You don't even need to know the fundamentals. If you don't want to, that's fine. You can scalp it if you want. You're the manager. You can spot trade it if you want. You can day trade it if you want. You can swing trade it. You can position trade it. You can hold it for as long as you want, as short as you want. You can enter on moving averages. You can use CCI, ADX. You can use candlestick pattern. I really don't care. You wake up in the morning and you represent to our firm the person who shorts Brent crude. So you just simply look for levels of resistance in which you would short. And every single day you should have one or two prices identified in which you would look for whatever your trigger is for selling. And imagine now you're not trading to make money per se. You're trading to build the discipline and the confidence that you can identify today the one or two places you would consider selling. And if they don't appear today, well, great. It's fine. It's not your worry, not your concern. That's where you want to get as a trader in general, so that you have consistency in what you do. And with consistency, you'll develop control. And or actually control first, then the consistency, then the confidence. And then you can start folding in longer term analysis. You can start folding in fundamental analysis. And you really start walking the walk and talking the talk. And you can become truly an expert in Brent crude. You really could. And then the whole energy complex. And then just global macroeconomics in general. Plus have a 3-year track record that you could share with someone. And you could say, well, for the 3 years I traded with the MetaTraders group, I was in charge of shorting Brent crude. Here's my track record. Here's my analysis. And I can do this anywhere, anytime, with anything. Right? This is my marketable track record. That's where we need to get you guys. So anyways, thank you for being a part of my group every day. Please subscribe. Please, can you do more? You know, I just poured my heart out. Would you do a like? I like it when you pour your heart out. But also, if you are new to our group, would you please open an account? Even a demo account is a good start at Traders Way. Give us an opportunity to earn your loyalty and respect. And maybe one day you'll feel confident and comfortable to open a live account with us. Okay. So peace on earth. May the pips be with you. May your profits be above average. Today is Thursday, so I guess I'll see you tomorrow, Friday. So thank you for being on my team. I really do appreciate that. Cheers.